Hi everyone, welcome back to my YouTube channel. This is Raz, and in this video, we will continue our discussion about losses. If you're ready, let's start. Our coverage in this topic, as what I have introduced to you in the other video, they have are losses arising from casualties, the losses arising from operation, the losses arising from wash sales, the abandonment losses, and also the losses arising from gambling. So these are the 5 losses that we will cover in our topic, losses as an itemized deduction from our gross income. So we have already discussed these losses arising from casualties in our other videos, in my first video. So if you have not watched that video yet, I will link that video here, and I will put the link in the description box below. So in this video, we will discuss about losses arising from operation. Okay? We have here net operating loss. So as I have already mentioned in our other videos, when we say loss, this is the amount that the taxpayer lost either from casualties or from operation. And when we say net operating loss, if you already have an idea, this loss arises from operation. Maybe there is more expenses than revenues. So net operating loss means the excess of allowable deductions over gross income of the business in a taxable year. So when we say net operating loss, this is the excess amount of allowable deductions over the gross income. So for example, if the taxpayer's income or revenue is only 100,000 pesos, and the cost of sales and expenses and everything deducted from the gross income, let's say it amounts to 150,000 pesos. Therefore, in that case, the taxpayer's cost of sales and expenses exceeds the revenue. So there is said to be a net operating loss. Okay? When the allowable deduction exceeds the gross income for any given taxable year, such taxpayer is said to have a net operating loss. This condition is almost similar to that net loss in our accounting subjects. So the net operating loss of the year may be carried forward in the next 3 years or until such loss is totally eliminated, whichever is shorter. So you have already the idea of carrying forward losses. Remember in our discussion on the capital assets which are not subjected to capital gains tax, I will link the video here. We have mentioned that when the capital loss exceeds the capital gains, we know the taxpayer who sustained the loss could carry over, meaning to carry forward the capital loss in this year to the next year. Okay? That is called net capital loss carryover. But in this particular scenario, the loss to be carried forward is not a capital loss, but an operating loss. In the capital loss, we can carry over the loss, such net capital loss, only for 1 year. But net operating loss can be carried forward for 3 years. Okay? This is something unique to net operating loss carryover. So we can carry over the loss, the net operating loss, for 3 years or until such time that the operating loss is fully absorbed. But the number of years maximum is only 3 years. Okay? So later we'll explain how net operating loss is done. So this is called NOLCO, or net operating loss carryover. If after the 3-year period, the loss, the operating loss, was not entirely deducted from the gross income, such loss can no longer be carried over. Again, in our net capital loss carryover, under the NCLCO, we can carry over only the capital loss for 1 year. But NOLCO, or net operating loss carryover, can be done for 3 years. Suppose we have a loss on year 1. We can carry over that net operating loss in year 2. And if not fully absorbed in year 2, we can still carry over that in year 3. And if not fully absorbed in year 3, we can still carry over that in year 4. That's the third year. Okay? If the net operating loss is still not fully absorbed in year 4, we can no longer carry over that net operating loss, because again, we can only carry over net operating loss for 3 years. However, we have a special case. This special case only applies to this year 2020 and next year 2021. So, to mitigate the costs and losses stemming from the disruption of economic activities, the Bayanihan to Recover as One Act, or Bayanihan 2, extends the carryover of the NOLCO as deductions to the next succeeding 5 consecutive taxable years, immediately following the year of loss. So this Bayanihan Act only applies to operating losses incurred and sustained in the taxable years 2020 and 2021. So what is this Bayanihan Act? As we know, we are facing a threat, and that is the pandemic crisis brought by the COVID-19. So many businessmen, taxpayers already suffered from operating losses brought by this pandemic. So our government extends its incentives to those taxpayers who have sustained losses, operating losses for this year and next year. So, the Bayanihan to Recover as One Act, or Bayanihan 2, was passed to strengthen the government's efforts to mitigate the effects of COVID-19. Among the responses and recovery interventions provided in the Act are tax reliefs that would somehow help ease burdens of the taxpayer. So, as I have said, any operating losses incurred during this year 2020 and losses in the next year could be carried over for 5 years and not 3 years. However, those losses incurred in the previous year, 2019 and before that, and 2022 and after that could be carried over only for 3 years. Okay? So, the following rules shall apply when forwarding the net operating loss. Number 1, the net operating loss of the business for any taxable year shall be carried over as deduction from gross income for the next 3 consecutive years, immediately after or following the year of such loss, except again when the loss is sustained this year or next year, 2021. So at the time of the incurring of the net loss, the taxpayer must not be exempted from income tax. So those taxpayers who are exempted from income tax, like the private education institutions or those taxpayers registered under the BMBE, so since they are exempted from income tax, they cannot apply for NOLCO because essentially they are not subject to tax. So why should they apply for NOLCO when they have nothing to tax on? Also, there is no substantial change in the ownership of the business or enterprise. So later we will discuss what is this substantial change. On the other hand, for mines other than oil and gas wells, net operating loss incurred in any of the first 10 years of operation may be carried over for the next 5 years after the incurrence of such loss. So if you are a mining company or if you are a taxpayer engaged into mining other than oil and gas wells, any losses incurred in the first 10 years of the operation could be carried forward for the next 5 years. So if it's your 10th year of operation and then you still incurred a loss, that loss could still be forwarded in the next 5 years. But if you are already in the 11th year and still you incurred a loss, that loss could now be carried over only for 3 years. Again, for mines, they can only carry forward the loss for the next 5 years if the loss is incurred during the first 10 years of operation. After that, they can only carry it over for 3 years. Okay? The following taxpayers are permitted to deduct NOLCO from their gross income. Number 1, individual taxpayers engaged in trade or business or in the exercise of profession. So whether you are a resident citizen or non-resident citizen or resident alien or non-resident alien engaged in trade or business, you can actually carry over or use your net operating loss in any year as deduct against your gross income in the next 3 years, provided again you are engaged in trade or business or in the exercise of profession. If you are a taxpayer and you are employed, you are earning out of compensation, then of course you cannot deduct NOLCO because essentially you are not having an operating loss because you are not in business. Okay? Also, domestic and resident foreign corporation who are subject to normal income tax. So domestic corporation and resident foreign corporation can also deduct NOLCO against their gross income. So in our other videos, in our future videos, we will discuss the taxation for domestic, for resident foreign corporation, and non-resident foreign corporation. Also, special corporation subject to preferential tax rates such as private education institutions, hospitals, and other and regional area headquarters, they can also deduct NOLCO. Again, we will discuss these corporate taxpayers and special corporations in our future videos. Any person, natural or juridical, enjoying exemptions from income tax pursuant to the provision of the tax code in any special law shall not be entitled to deduct NOLCO from their gross income. As I have said, any taxpayer who are exempted from income tax, they cannot deduct NOLCO because they don't have a net income to tax. They're enjoying exemption from income tax. Okay? Also, corporate taxpayers who are subject to gross income tax, like those non-resident foreign corporations and those which are registered with PEZA, cannot enjoy the benefit of NOLCO because they are taxed at their gross income and not on their net taxable income. So they cannot deduct NOLCO on their gross income. Okay? So let's have an illustration. Star Excellence Corporation, a domestic taxpayer, began its operation in 2001. So we have here 2015, 16, 17, 18, and 19. We have sales, we have gross sales, 1,500,000 for 2015, 1,900,000 for 2016, 1,880,000 for 2017, 1,840,000 for 2018, and 1,980,000 for 2019. We also have cost of sales, 700 in 2015, 1 million 2016, 2017 1030, and 2018 970, and 2019 1,010,000 pesos. We are also given deductions here. So we have 980, 880, 900, 930, and 820. So we are asked to compute the income in every year. So actually this is quite simple. So our solution would be, we will first compute for the gross income. So we have gross sales, 1,500,000 and so on, and we have cost of sales, so on and so on. So we have gross income of, in 2015 it's 800,000 pesos, in 2016 it's 900,000, in 2017 850, in 2018 870, and in 2019 970. We will now deduct from the gross income the deductions, the allowable deductions. So in 2015 there is a deduction of 980,000 pesos, and in 2016 there is 880, in 2017 there is 900, and then so on. So our net income or net loss for the years 2015 through 2019 are as follows. So for 2015 there was a net loss, and that is 180,000 pesos. In 2016 we have a net income, and that is 20,000 pesos. In 2017 we also have another net income, which is 50,000 pesos. In 2018 we have another net operating loss of 60,000 pesos. And in 2019 we have an operating income of 150,000 pesos. So we will bring down this net operating income or loss in 2015, and that is 180,000 pesos. So this net operating loss in 2015 can be carried forward or carried over in 3 years, in 3 succeeding years, immediately following 2015. So therefore, we can carry over this loss in 2016 or in 2017 or in 2018. Okay? We only have until 2018 to carry over the loss. However, we can only carry over this loss if there is a net income in the following years. So, in 2016, there is an income, and we know we can carry over the loss. However, the income in 2016 is not enough to cover the loss because the loss is 180 and the income is only 20,000. Therefore, there is another excess loss which we can still carry over in 2015. However, the income in 2015 is still not enough to absorb the net operating loss in 2015. Therefore, our last resort is to carry over the excess loss in 2018 if there is an income in 2018. However, as we know, in 2018 there is again a net loss. Therefore, we can no longer carry over the net operating loss in 2015. And yes, in 2019 there is an income, but 2019 is already the 4th year after the loss was sustained. And as I have said, we can only carry over any net operating loss for the next 3 consecutive years. Therefore, any losses which cannot be absorbed in the next 3 years after the loss was sustained, they can never be deducted at all in 2019. Okay? By the way, when claiming NOLCO or when carrying over net operating loss, we will follow the first in, first out. So if the loss is sustained in 2015, this will be the first loss to be carried forward. If there are 2 losses, let's say for example 2015 and 2016, we will first deduct the 2015 until such time it will be fully absorbed. Okay? Next 2016 and so on. So we will deduct the NOLCO from 2015. Again, we can only deduct 20,000 from this amount because the income in 2016 is only 20,000 pesos. Therefore, we still have a balance of 160,000 pesos from our net operating loss in 2015, right? So in 2016, we would have a 0 net income. So the balance of 160,000 pesos from our net operating loss in 2015 can still be carried over in 2017. However, we can only carry over 50,000 pesos because the income in 2017 is only 50,000 pesos. So after we carried over the 50,000 pesos in 2017, our remaining balance of the net operating loss from 2015 is now 110,000 pesos. Okay? That is 180 minus 20 minus 50. So there is still a net operating loss of 110. So our last resort is to carry over this to 2018. However, since there is a loss in 2018, we cannot carry over the net operating loss in 2018, right? And remember, this is the last year that the net operating loss in 2015 could be carried over. So therefore, the remaining balance of 110 from net operating loss in 2015 could no longer be carried over and absorbed in 2019 because the 3-year period has already elapsed. Okay? Now we have another loss in 2018 and that is 60,000 pesos. Again, we can carry over this next year and that is to be deducted from our net income in 2019. So therefore, in 2019, the entire net operating loss from 2018 is fully absorbed. So we will have a net income in 2019 of 90,000 pesos. That's it. That's how you carry over the loss. Okay, so again, if you have a loss, it could only be carried over for 3 years, 3 consecutive years, unless the loss is sustained in 2020 or 2021, because they could be carried over for 5 years. Or if you are into mining and you have a loss for the first 10 years, those losses incurred in the first 10 years could be carried over for 5 years. After that, after the 10th year, the loss could only be carried over for 3 years. So, we will compare NOLCO and NCLCO, or the net capital loss carry over. Net operating loss occurs when the allowable deductions exceeds the gross business income, while net capital loss occurs when, in case of individual taxpayers, the capital loss exceeds the capital gains. Net operating loss may be forwarded and charged against the net income before NOLCO for the next 3 years, while, as we know, for net capital loss, they can only be carried over for 1 year. NOLCO is available to both individual and corporate taxpayers doing business, while NCLCO, or net capital loss carryover, is available only if the taxpayer is an individual taxpayer. Because corporate taxpayers, they cannot have NCLCO. Okay? Now let's talk about when there is no substantial change in the ownership. Net operating loss carryover shall be allowed only if there has been no substantial change in the ownership of the business or the enterprise, in that not less than 75% in nominal value of outstanding issued shares of the business is in the name of corporation, is held by or on behalf of the same persons, or not less than 75% of the paid up capital of the corporation if the business is in the name of the corporation, is held by or on behalf of the same persons. I know this might sound confusing, but remember this: net operating loss carryover can only be allowed if there is no change, or if there is no substantial change in the ownership or equity of the corporation. And when we say no substantial change, meaning at least 75% of that outstanding stocks or shares or capital is held by that person. If there's a change in equity, when the change is not at least 75, then there is now a substantial change. We will illustrate this in just a minute, okay? In determining whether there is a substantial change in the ownership of shares held by a corporation should be traced to its ultimate beneficial owners, since Section 3 of the Tax Code, as amended, explicitly provides that there is no substantial change in the ownership of the business if not less than 75% of the nominal value or paid up capital of the corporation is held by or on behalf of the same persons. So we will illustrate this. For example, we have this fact: ABC Corporation owns DF Corporation, which has NOLCO. So ABC Corporation is a parent of DF Corporation. DF Corporation has NOLCO. ABC Corporation transfers DF Corporation's shares to XYZ Corporation in exchange for 100% shares of XYZ Corporation. So what happens here is that ABC Corporation is the parent and DF Corporation is a subsidiary of ABC Corporation. This DF Corporation has NOLCO. Okay? And then the parent company, ABC Corporation, transfers its shareholdings with DF Corporations to XYZ Corporation. And in return thereof of that transfer, ABC Corporation received 100% of XYZ Corporation. So now, we would say that the owner of DF Corporation is no longer ABC Corporation, because ABC Corporation transferred its shareholdings with DF Corporation to XYZ Corporation. So the owner of DF Corporation is now XYZ Corporation because XYZ Corporation is now the holder of the shares of DF Corporation. But remember, in return of that transfer or in exchange of that transfer, XYZ Corporation also transferred its 100% shares to ABC Corporation. So therefore, XYZ Corporation is now also a subsidiary of ABC Corporation. Okay? So DF Company or DF Corporation is a subsidiary of XYZ Corporation now, and XYZ Corporation is also a subsidiary of ABC Corporation. Therefore, the ultimate owner of these two corporations, DF and XYZ Corporations, is ABC Corporation. So therefore, there is no substantial change. Okay? So it is held that DF Corporation's NOLCO is retained because DF Corporation's share are held by XYZ Corporation on behalf of ABC Corporation, the original owner. So there is no change in that. There is no substantial change because it is as if the ownership of DF is just transferred to XYZ, which later this XYZ becomes a subsidiary of ABC Corporation. So there's no substantial change in that. Another case, X Corporation owns 100% of Y Corporation. Y Corporation owns 100% of Z Corporation. Z Corporation has NOLCO. Z Corporation is merged into Y Corporation. So X owns Y, Y owns Z, Z has NOLCO. Z is later merged to Y. So in short, X is the parent of Y and Y is the parent of Z. So Z has NOLCO and Z is merged to Y. So therefore, again, there is no substantial change because the ultimate owner is the same. It's X Corporation. So Z Corporation's NOLCO should be retained and transferred to Y Corporation. Prior to the merger, X Corporation already indirectly owned Z Corporation. Since Y Corporation, 100% owned by X, owned Z Corporation. After the merger, X Corporation now owns directly Z Corporation as absorbed, which continues to exist in Y Corporation. So in this case, Z is merged to Y and we know the owner of Y is X Corporation. So again, there's no substantial change. So the NOLCO of Z Corporation, which was absorbed by Y Corporation, should be retained and should be deducted from the gross income of Y Corporation because Y Corporation is now the existing or the surviving corporation after the merger. Okay, so that's it. That's how the rules of NOLCO works. So I hope you learned a lot from this video, and I also hope that you would watch the other video that I have about losses arising from wash sales, abandonment losses, and losses from gambling. Thank you so much for watching, and if you're new to this channel, please subscribe and click notification bell so you will be notified whenever I will upload new videos. Bye!